We have talked about Lyft a little bit on the show before, so I don't know that the ride-sharing industry needs a ton of introduction for our listeners. Uber was the first company to step up in this space. They are the dominant player. They're a little different than Lyft in some ways, though. They operate internationally. They are not just in North America like Lyft is, and they have a couple different business segments, Evan. It's not just ride-hailing and ride-sharing and some of these mobility concepts that Lyft has.
Right. They're much bigger than Lyft. Lyft's in 2 countries. They're just in North America, basically, in the US and Canada. Uber's in like 63 countries. They have about 5 times as many total users, which makes sense given how many more countries they operate in. But yeah, like you mentioned, they also have this Uber Eats, which is meal delivery. They have this Uber Freight, which is like this platform to connect shippers and carriers. It's not the autonomous truck driving stuff that they're exploring very controversially a couple years ago. And so yeah, this is a really sprawling company. They've imagined flying cars. They're trying to develop autonomous cars. They're still looking at autonomous trucks. They had this setback last year when they had a fatal accident involving one of their autonomous cars, but they're still pushing forward there. So, they have their hands on a lot of stuff.
Despite the fact that they're a little bit more diversified than Lyft may be when it comes to business operations, really, mobility is still the name of the game for them, personal mobility, and that's the ride-sharing, ride-hailing business. I think that all told made up just over $9 billion in revenue, or 82% of revenue for 2018. I think the total pie was about $11.2 billion. So that's where most of the money is coming from. Uber Eats is surprisingly large, $1.5 billion in 2018, roughly 13% of revenue. Freight is a very quickly growing part of their business, but only $370 million in 2018. I think they're doing like 400% year-over-year growth over there, but it's on a pretty small denominator.
Right, exactly. And I was also kind of surprised at how large Uber Eats is, but it also kind of ties back into just the sheer size of their global footprint and how many countries in which they operate. So, for example, if you compare it to a pure play like Grubhub, who's obviously, a big player in local food delivery in the US, Uber Eats actually has more restaurants on their platform than Grubhub. But again, I think that's mostly a function of just, the number of countries where they operate.
Yeah, and the pitch that they are really trying to get across to investors, it seems, is we are the everything for mobility and delivery and transportation, kind of an Amazon of transportation type pitch. And the Uber Eats plays into that a little bit. In the S1, I noticed, I think 15% of people that are active consumers on the ride-hailing business have used Uber Eats in the most recent quarter, Q4, that was finished. So the idea is we build out this massive network of people that use us for ride hailing. As we add on all this other stuff, they come to us for that too.
Right, absolutely. And that's actually, comes back to how they define one of their active users, which is either you take a ride on a car trip in one of their cars, or you get a meal delivered. So if you were to just use one or the other. Obviously, they want you to do both. But, to your point, they're trying to build one platform that does a bunch of stuff, and anyone that's using any of these services is considered an active user.
If you're taking a quick look at this business, it might look like Uber is profitable when Lyft is not. That is really the case because of some non-operating reasons, though. The company did post $1 billion in net income in 2018, but they posted a $3 billion operating loss during that period. Most of, if not all of that profitability was due to divestitures and unrealized gains on investments. So the core business here is still not profitable. The company managed to post a profit last year, but don't expect that going forward.
Right, and I think it just boils back down to this idea that the underlying unit economics around these rides is just not very good, and arguably not sustainable in my mind. But we'll kind of see how that plays out. But kind of like when we talked about Lyft, the numbers just for the core business of facilitating these rides, the numbers just do not look good.
And that's because you have two insanely competitive companies that are trying to build up their base of both drivers and riders, right? They're trying to incentivize drivers to be a part of the platform. They're trying to incentivize riders to use it. That means very high marketing spend. That shows up a couple different ways for those companies, but it's just going to eat into profitability no matter how you account for it.
Right, and they got to compete on price because it's a commodity, and a lot of the drivers too. It's very common knowledge that most drivers are on both platforms, so they're kind of competing at the same time to always for both the drivers and the riders, and whoever can offer the best financials.